Mark Elenowitz is our guest. He is the CEO of Banq, and he's the founder of Banq, B-A-N-Q. B-A-N-Q is a division of TriPoint Global Equities. This is what these guys do. It's an electronic investment platform, okay? And it streamlines, it's a cross-tabulation that matches accredited investors with growth companies and alternative investment opportunities. Joining us here in the program right now, say hello to Mark Elenowitz. So Mark, how are you, sir? Nice to talk to you.
I'm great. Thanks for having me.
So I'll tell you what, because I've got an investment banking background and venture capital background, this is a fantastic idea, because one of the toughest things for investors to do is identify credible, quality deals, for lack of a better word, and then some of these, sort of alternative, companies looking for capital don't have any access. So you've got the Jobs Act. Jobs Act has sort of opened up the capital markets a bit to the rest of the world. Talk to us about how all this stuff intersects together and works in concert together for us, Mark.
Absolutely. So as you mentioned, Jobs Act came back in 2012, and that's jumpstart our business, and basically and Business and Startups Act. And what it was designed to do was to allow small companies to go out and raise money from the capital markets. And when Jobs Act came out, there were basically three areas. There was Title II, Title III, and Title IV. And those were the areas that most people, it came attention, people started to understand. One of the big areas was Title III, which is called crowdfunding.
Yeah.
And one of the things that most people don't realize is that crowdfunding is actually not legal in the United States. Or equity-based crowdfunding is not legal.
Okay.
Title III has not been approved by the SEC. So a lot of companies or a lot of people have heard of Kickstarter, Indiegogo.
Yeah.
But that's not equity-based.
Yeah, that's basically pre-sales, correct?
It's pre-sales, and it's donation-based or charitable-based, where investors put up money and they'll get to walk the red carpet. They get to have a mug or a widget at a discounted
T-shirt,
price.
free
But they don't get their money back.
Baseball hat, swag bag.
That's right. This is not that, though. This is something different, isn't it?
No. So what we recognized is Title II was what's called general solicitation, and that was pretty exciting. It was the first time since really 1934 you could go out, take a business, put an ad in Times Square, and an ad in the newspaper, and tell everybody about what you're doing. In the past, you could only market to people that you had a pre-existing relationship with. But that was only available to accredited investors that had over a $200,000 income and $1 million net worth. So although, including myself and most bankers on Wall Street, we got excited about it, but the reality is that it's still a limited marketplace, and it's something that people don't wake up and want to buy stock. You still have to sell it to them.
The name of the company is Banq, B-A-N-Q, and the website banq.co, banq.co. Our TV audience is taking a look at that, but if you're listening to us on the radio and don't have the benefit of your couch for our television audience across the country, I'll put that out on our Twitter feed out to the 21,000 Twitter followers.
So it's kind of like a Match.com for investors and companies.
It really is, isn't it? Mark, is that about right?
That's exactly what it was. So what we recognized was there was an inefficiency in the market.
Yeah.
If you think about it, the best IPOs only go to the top institutions. The deals that don't do so well, that's where it goes out to general public. So we recognize that there's also not transparency of information. There's not a level playing field. So we went out and designed Banq to level that. We took what we do in the institutional world, and now we offer to accredited and non-accredited investors. We allow them the same access to the information that an institution sees. And more importantly, what we do is we're a syndicate. So not only do we do our own IPOs, but we work with other banks. So investors now get a chance to come in and get a piece. So if you think about Facebook, all the institutions were selling. All the retail start buying. So what happened? The day the IPO comes out, it collapses. But you look at another deal, maybe GoPro or some of the others, all the institutions bought it, and retail got very little. With Banq now, everybody gets an opportunity to get the same type of deal flow that they normally would be reserved for the elite crowd.
Hey, I'm going to keep you over the break because this is so interesting. But I want to talk to you about. I'm just going to give you. I'm going to give you a heads up because I don't want to surprise you with this one. But there was a lot of people are concerned. I shouldn't say concerned. People have questions about the legality. In other words, there was the SEC was so fraught with rules about raising capital in the past. This just seems too easy. So let's talk about the do's and the don'ts and the yeses and the nos coming back. And I can't wait to sort of uncover some of this stuff. His name is Mark Elenowitz. He is the CEO of Banq, B-A-N-Q, banq.co. It is a subsidiary of TriPoint Global Equities. These guys are a broker-dealer. You guys know what that is. We've been talking about that for some time.
Get in on
It is the Big Biz Show. I'm Sully. That's Russ T. Nailz. Stand by. We're back in a sec.
Looking for long walks on the beach. Lots of money on my investments.
Mark Elenowitz is our guest. He's the CEO of Banq, Banq. You can go to banq.co. Electronic investment banking platform, matching accredited investors with, I hate to use the word deals, but there's companies and alternative investment opportunities, what we call in the biz deals. But what's really interesting about this is how it's really sort of intertwined, Mark, with the Jobs Act and that you just mentioned here. And you just talked about a little bit of crowdfunding. You talked about that being part of the Jobs Act. Do you remember? I remember the days when we had, you had what's called blue sky in every document. Like if you were to raise money through a Reg D 504 or something, you could raise like $1 million or something like that. And it was fraught with all of the rules and regulations, to put it in kind of a plain Jane parlance. Has all that gone away now, Mark? Because it seems to me the way investing is intended through the Jobs Act is supposed to make things easier. Is it indeed really easier?
It is, and that's actually Title IV of the Jobs Act, which is something called Reg A+. And what I like to call it is the small cap IPO.
Okay, before you go there,
Reg A?
Reg A. So explain explain the old style Reg A.
So Bob Marley.
Yeah, I was going to say, Yaman, praise Jah.
Yeah, so tell us about the former Reg A, and then tell us about Reg A+.
All right, so the former Reg A was basically allowed companies to go out and raise $5 million. Mm-hmm. And it enabled you had to do it in certain states. As you said, you mentioned something there called Blue Sky, which is really important, because what Blue Sky is it enables an issuer to sell securities in certain states. When you're listed on NASDAQ, you're listed on the NYSE, you have a national Blue Sky exemption, so you can market your securities to all 50 states. In Reg A, you couldn't do that. In a private placement, you couldn't do that. In a 506C or a PIPE, you can't do that. Mm-hmm. Now, with Reg A+, you can. And that came into effect here in June. And that, to me, as I said, is the most exciting part of the Jobs Act, because now you can go out on an offering to all 50 states and market your product. But more importantly, you don't have to be accredited to participate.
Now, hold on a second. Let's back up there, Mark, because when Russ starts breathing through his mouth, we know we've lost him.
I'm all excited about Reg A.
Accredited investors, Russ, is basically an investor who signs an exemption saying that I'm either worth X amount of dollars. I'm not a professional investor, but I understand the risk. Explain accredited investor versus non-accredited investor for us, Mark.
Yeah.
Okay, so an accredited investor, you hit it on the head. You have to be sophisticated and understand what you're doing. And one of the tests is that you have to have at least a $200,000 income or $1 million net worth.
Wow. Either or.
Well, that's pretty good.
Under the Title II of the Jobs Act, not to confuse things, you actually have to prove that. In the past, you could check the box, but now if you general solicit and you go out, you actually have to send your tax returns or an income statement, and you have to prove it. It's a very difficult task. And
I miss those box checking days. That's how I bought a house, too. Just check the box. Yeah, that's what I make. Here's your house.
Right. That got us in trouble. Reg A+, though, obviously, as you're mentioning here, it changes everything.
Reg A+, if you think about it, it's a mini IPO, as I said. So in a regular IPO, you don't have to be accredited. Anybody who meets the suitability and the investment objectives, and that's important because not everybody should be qualified to invest.
That's right.
But you're not limiting it to accredited. You can be non-accredited. And now, with Reg A+, all those investors can participate. So this is really key for small businesses that want to go raise money.
It really is. And so let's talk about this. Here's the next thing, too. First of all, I want to have you back, because you need to be our expert anyway. We need to get you. You need to be back here like every. And thanks again to our friends at 1-800-PR for booking this. But you're such an expert at this. This is where Banq comes in, though. This is the secret sauce.
This is the secret sauce
for Banq, because what you guys do is you
trading.
streamline this thing, right? You streamline the process, correct?
Completely digital. So an investor, just like an online brokerage account, can go on, open an account with us. Mm-hmm. You can buy Microsoft, you can buy Apple, you can trade for 99 cents a trade for certain types of trades, $3.95 for other types of trades. But what that does is gives you access now to these type of products. So what I said at the very beginning is you get complete transparency. So the investor can come in now And when you look at a prospectus on an IPO, it's black and white. It's boring. It's important because it tells you all the risk factors.
Right.
It tells you how you're going to lose your money.
Yeah.
But that doesn't give you a true reflection of today's business. So what we do is we offer videos and an interactive capability. So the investor in Iowa can now digitally and virtually travel to Florida and do a road show and visit the facility, meet management, see it.
See, this is good. This match made in heaven. I just happen to own a TV studio that produces video, Mark. You and I are getting in bed together, pal. This is us.
And that way you can kind of do your own vetting, right? You can kind of go,
Well, part of the problem, and I shouldn't say the problem so much, it was the access to the actual, touch and feel and smell the deal. You'd have to read through it. Mark Elenowitz, CEO of Banq.co, Banq. I want to have you back, man. I really appreciate your time and your expertise.
Yep.
Terrific. You're terrific. You're a terrific addition to the program, and I can tell you, boy, I'll tell you what.
Now I feel like a big investor, like I have that same power.
And you do. You've got the same power, and you've got the same information. Thanks to our friends at Banq.co. Thanks again to 1-800-PR.